Hello, everyone. Welcome to another Cengage Financial Accounting homework walkthrough. Today, we're going to be looking at Chapter 7, uh, Petty Cash and Cash Short and Over. This is a part of the internal controls and, in particular, internal controls for cash section. And a petty cash fund is a fund of physical cash that a business has to just make purchasing items easier for the staff on hand. So as you can see, the kind of stuff that management is purchasing with the petty cash is some store supplies for $510, some express charges, right? It's an emergency. They got to charge the express charges. And then some miscellaneous office supplies, stamps, repairing the lock on the file cabinet, some postage that's due, office supplies, and each of these is evidenced by a petty cash receipt. And so that's our control here, right? We establish a petty cash fund of $1,200, and then we have our petty cash receipt. And so this problem, we're going to go through all the petty cash transactions, and we're going to journalize each of the transactions, and then we're also going to take a look at the cash register records and journalize those sales and any cash short or over that's required. And the journal that we have here, the date is July 1st, because that's the date that we're establishing the petty cash fund. And we're going to debit petty cash because that's a cash account just like any other cash account. And so we're going to increase petty cash with our debit, and we're going to decrease our regular cash account. And now on the 12th, we have cash sales for the day. And according to the register, the cash should have been 8,356. And so that's what we're going to record as our actual revenue. And so we're going to have cash sales and cash short and over. In our chart of accounts, those are our three accounts that we need. And in our expenses, we have cash short and over. And so the amount of sales is the amount that the register said. And the register said 8,356. And then the cash that we received has to be the physical, like the physical cash that we actually received. So that's 8,389. And then the cash short and over is the difference between the two. And so we need more credits in this situation. We're $33 short on our credits. And now, so to balance our journal entry, we have to credit cash short and over. So even though this is an expense, it's reducing the expense. Um, Assuming that in the cash register, some days it's over, some days it's under, it's gonna even out essentially, and then the expense is gonna be fairly low. Um, and so on to the next journal entry. So the, oh, and then we're also gonna have another cash sales later here, but the petty cash on hand on the 31st was $217. And so we replenished the petty cash fund for the following disbursements, each evidenced by a petty cash receipt. So let's take a look at each and every one of these transactions We're going to journalize this as of the 31st because that's when we counted the cash and replenished it. We have to record each of these as, an increase to it. So store supplies, that increases our supplies asset. And in our chart of accounts, we do have a specific asset for store supplies. We have office supplies. We have delivery expense. So first we have store supplies. Our store supplies debit $510. Delivery expense debit $90. Office supplies. Well, okay, so we had more than one delivery expense. We also had the $135 delivery expense, so our total delivery expense is going to be $225. And our office expense for office supplies, we have 30, 35, 50, and 25. And that comes out to a total of $140. And then we have a couple of miscellaneous administrative expenses, and that comes out to $88. And then if we add up all of these expenses, we get, and this is important to know if we're short or over on the petty cash fund. So we know we started with 1,200, and then we add up 510 plus 225 plus 140 plus 88, and that's $963. And that means that we should have $237 left in the petty cash fund. However, we only have $217. And so we're $20 short. So that's going to be an expense to cash short and over. And the petty cash fund is only used when it's being replenished. What the petty cash account is only used uh, when the fund is initially established or increased or decreased. Um, and as part of our control, at all times, the petty cash has to equal the amount in the petty cash refund plus the receipts that we have here that equal the petty cash fund. And so to replenish the petty cash fund back to $1,200, we need to reduce our cash by $983 because that balances out this. And also 1,200 minus 217 is $983. And so that's the amount of cash that was used up in the petty cash fund, and we have to replenish our petty cash with that amount. Next, we have also July 31st. We have cash sales for the day according to the cash register was 10,289. And that's going to be our sales. And then our cash received is 10,275. And so we are short $14 in this situation. And then we decrease the petty cash fund by $100. And so that's going to be an increase to cash and a decrease to petty cash So essentially, you can think of this as taking $100 from petty cash and just redepositing it in the bank. And oh, here we had a wrong date for this journal entry here. This was deposited on the 12th. And so that's our journal entries for this. Now think, what is the petty cash balance at the end of the month in this situation? $1,100. And that's because we had, it was initially 1,200, then there were a bunch of purchases throughout the month, and then so a missing $20. And then we replenished it at 983, and then we reduced it by $100. And so our ending petty cash is $1,100. And that is all. So I hope you guys have a better understanding of the specific journal entries to account for petty cash, and then also how it plays into cash short and over, and also recording cash sales for the day using cash register records if there's any discrepancies. Remember to like and subscribe for more homework help videos. And if you're still having questions, watch my lectures on cash internal controls or some of the other videos I have on bank reconciliations. Thank you, everybody.